TCS is in focus. They have declared a buyback or a board meet for buyback. It's a stock which is higher right now and is also taking the other IT names higher. TCS is up 1.2%. The day's high was 2,476. Let's welcome in an analyst on TCS. Sarabjit Kour Nangra, VP Research at Angel Broking, is now joining us on a phone line. Ma'am, if you could just tell us by the TCS announcement, did it surprise you in terms of buyback which they are planning for their shareholders?
No, it's not surprising. Most of the IT companies we have been, though it's our view, but we have been of the view that since they have so much cash, it's increasing day by day and they're not able to utilize it. So that was something which was actually something which we think that most of the companies either will go for a buyback or should increase payouts. Even companies like Wipro, which is not doing so great financially, has said that they will increase the payout ratios because there's a lot of cash which is getting unutilized. So we're not surprised actually, because it's demanded also because most of these IT companies are in terms of stock also for almost I think, if I'm not wrong, more than 1.5 to 2 years are not rewarding shareholders in terms of stock markets. The valuations are at a value at which, it's very lucrative for long-term investors. And these buybacks kind of endorse that the valuations of these stocks are, since even the companies are buying it on their own for the companies. I think it's a sign that what we have been believing, that the valuations probably have bottomed out given the fundamentals of the company. So it's not very surprising actually.
Right. After Cognizant results, did you expect any large cap company in India also to do a similar, do similar capital allocation?
Sorry, come again. What about Cognizant?
Cognizant also gave a big buyback during this results. After that, did you expect Indian companies to follow the similar path?
No, as I said, we are expecting either payouts to increase or buybacks to happen because they are sitting on a lot of cash. So even in tough times, they are doing profitably, if not on growth, but on profitability versus they are still better off. So and they are generating good amount and they are pretty huge sizes in comparison to other companies. So it's a lot of free cash lying over there. So yeah, we expected, but whether they will do buyback or increase, TCS already increased its payout. So probably taking a buyback route to make sure that excess cash gets utilized.
As far as other IT companies are concerned, do you think other IT companies will be forced to follow what TCS is doing? It's a leader. All of them, as you pointed out, are sitting on big cash and investors are expecting big dividends.
We expect them to, and it's in their own interest, I think, if they reward shareholders because the cash lying on balance sheet is a drag on the ROE of the company.
Sorry, if you could just repeat that. I think the sound was not clear.
No, I said it's difficult for me to put a number to such events, but I guess it's expected that most of the companies will be getting into either increasing the dividend payouts or doing the buyback.
Right. In terms of dividend payouts, how do you think investors will take it? Do you think it will just be a short-term tactical overweight call till the buyback is behind? Because structurally, numbers are still looking weak.
The numbers, that's what I said. The stock prices at these valuations are discounting that the companies probably over the next 4 or 5 years will not grow at all actually in some of the companies. Whereas there are companies which are generating ROEs of higher than 40% of business cases even in a bad time like this. So I think there are concerns related to Trump which possibly see a scenario where they could be hit harder. I don't know how will that play out because that is something which is not in my domain to take a call on. But I think if it can't be that drastic, possibly that it could make them a zero company altogether. So I'm not that worried, but given the valuations, I guess it's already in many companies discounting. Possibly they will not be growing at least for next 4 or 5 years. So I guess that's very very harsh expectations. So I guess even buyback is a sign of TCS. TCS is still trading at premium to most of the companies of Infosys and HCL and other very large caps. So if TCS is that valuation, these value-added stocks as a management and the company are closer to the ground reality, I think it's a sign. Buybacks is always a sign that company thinks that the valuations are probably bottomed out, probably are attractive, if not bottomed out. So I think it's a good sign for shareholders.
Right.
And a comforting factor for shareholders. Yeah.
Right, Sarabjit, many of the tech companies have also looked at acquisitions now that they have this cash available. Do you think that also puts the money to good use? Can we see maybe if not big ticket acquisition, string of smaller acquisitions from these cash-rich companies to increase their digital interface, the products that they have and the platforms that they have?
See, acquisitions, as you rightly point out, large scale acquisitions are difficult to come by. They come to their own issues because most of these companies, Indian companies, will find very little value in acquiring a company which is abroad, because they have the skill set, they have everything, unless it's for product or for a domain where they lack the knowledge or where they don't have an expertise. So to that extent, that's why most of the IT companies are finding it difficult to do a large-scale acquisition, and obviously they should come at a price which is attractive.
Right.
Small ticket acquisition, which companies have been doing to enhance their, the domain expertise. So they take long time to result in numbers.
Right, we've also got some news coming in from Dr. Reddy's, where they've suffered a setback in a patent case in the US, and now we're seeing Dr. Reddy's slipping to a 52-week low as well. Do you have a view on some of the pharma stocks like Dr. Reddy's, where other than generic pricing pressure, they're even finding it tough to the patent case is going against them?
See, cases and all, these are day-to-day affairs that USFDA assures. These anyways don't get discounted in our numbers until and unless these result in some kind of a cash flow for the company. So we don't discount it any which way. So in terms of stock price, if you have to ask me, it doesn't make much of a difference to my recommendation. And as far as it's going for a 52-week, I think pharma is plaguing with the same uncertainty which IT is plaguing to some extent, which is that Trump's think that they don't know how US generics will be taken by the new government out there. But I think again there is undue, caution. I think generics is something which is the need of our for US for the crisis that is sitting over there. So I don't see that playing out that badly for generics companies. So from that perspective, yeah, it's more of nervousness related to US, which is reflected in IT and pharma both. So that's the reason you're seeing most of these stocks not doing much actually. Otherwise, here also a stock-specific view is available wherein you can get into companies like Sun Pharma, Lupin, which are doing nothing for last 3 years. At least Sun is not doing anything for last 3 years. It's underperformed a big way. So I think you can get into such stocks and make long-term investors can easily earn good return on their investments. So I think both in IT pharma, selective value plays are available, and I think investors should utilize this to get in these nervous times to get into the stocks and probably, earn on the long-term basis.
All right.
So the financial business proposition for both IT and pharma, I think fundamentally is very strong. There is no need, or they are providing a service in a way to US also in a way that increases the productivity actually. So even if they have to do in-house, they will take long time. So I guess it's a matter of for their government to figure out whether they want to defer it or they want to enjoy it now. I think they will probably continue to deliver it the way it's happening, because I think it's difficult to replicate such a low-cost, highly qualified manpower in other countries like US and then get this done when you need your own economy to flourish. But then there are certain event risks which happens beyond fundamentals for which I don't have a call, but fundamentally I don't see any reason for those two businesses not to crash.
All right. Thank you so much for speaking with us, Sarabjit, and giving us your views on the IT and the pharmaceutical space. We're going to slip into a break at this point in time, but